You mentioned at the start of this conversation you had a commercial real estate background. So Germany, or the German banks more specifically, have quite a significant exposure to commercial real estate, which, as we know, has been struggling.
Absolutely.
Do you see that in Europe as a systemic like risk that's coming to light? Because people obviously have been talking about it for quite a while in Europe and in the US. But do you think commercial real estate now is starting to become a big problem with higher rate environments?
In my opinion, it's a bigger problem in the United States than it is in Germany or in Europe at large. And two reasons. One is that America has a lot more supply of it relative to Europe. And two is that post 2008, German commercial real estate assets always priced in a certain level of vacancy into the equation, because of the fact that Europe's economy was structurally weak after 2008. The office sector is a pretty linear bet on the unemployment rate. I call office real estate a leveraged bet on changes to the unemployment rate. Essentially, that's basically what I think of office real estate as. First of all, it has the cash flow component, but in terms of the change in the prices of it, I think it's essentially just a function in the change in the unemployment rate. And so Europe having a higher unemployment rate than the United States after 2008 always priced in a higher amount of vacancy into the models of commercial real estate. When you bought the asset for like a 3-year out outlook, you always price in higher vacancy. So now with global trends like work from home, and some of that stuff is actually, materializing in a higher vacancy rate. Ironically, Germany was priced more correctly than the United States, which was priced for minimal vacancy. And now it had this exogenous shock of COVID and this sustained shock of work from home, although it's obviously not at the same levels as it was during COVID. It does not appear as we are ever going to get back in the United States to 2019 level of occupancy per capita of office occupancy of commercial real estate. It appears that work from home is here to stay almost permanently on some basis, whether it be 2 days a week, I don't know, whatever it might be. It does not ever seem like we are going to get back to that. And first of all, that was never priced into U.S. commercial real estate prices to this extent, and now it's being priced in, which is causing the cap rate to rise or the price of the property to fall relative to its earnings. And then number two, we have this higher for longer environment where all of these assets that were bought at 4% interest rates are going to have to be refinanced at 8% interest rates. So you have your NOI collapsing. At the same time, you're going to have to refinance, if you even can refinance at thing, and at twice the interest cost. And so we just think that there's going to be a lot of keys being handed back in commercial real estate in New York City. Not just in New York City, but around the world. In the United States, around the country. And we don't think that cycle has even began. Banks could be in a world of trouble. Banks are a leveraged business. So when they get paid back 90 cents on the dollar for their $1 loan, that could wipe out their entire equity. That's how companies like Lehman Brothers went bankrupt, right? Those mortgage-backed securities they owned were trading at 80 cents on the dollar, and they were 6 times leveraged. Their equity was negative. So that's essentially how it happened. And so we think that's beginning. We do not want any exposure to banks in the United States. Even if it does well, we don't think that's the way to, earn, the optimal type of return in this type of world. And also, one thing about real estate, to state the obvious, is that guy that signed the lease for 100,000 square feet in Midtown Manhattan in 2019, when his lease comes due and 30% of his staff is not there on a daily basis, how many square feet do you think he's going to take? You think he's going to take 100,000 again? He's going to take 70,000 square feet. So not only is the price per square foot going to fall, but the gross amount of square feet that are going to be used for commercial real estate is going to fall, and you're going to have the higher rates, which means higher interest costs, and higher cap rates, which means lower prices. We think this industry we are only in the beginning of this problem. We don't think we're nowhere near the end of this problem. And this is something that could, I think, have cascading effects through the entire economy that could cause a deflationary type of risk-off event that would actually compel us to start beginning owning treasuries more. But it would have to start happening. We wouldn't want to be ahead of that trade, because in our business, being early is just as bad as being wrong. So,
yeah. And do you think it would, I guess, make the market lose confidence a little bit in the banks with sizable commercial real estate exposure?
So
if that event started to happen.
Interestingly, in the United States, most exposure to commercial real estate for the banking sector is via regional banks. Large banks, the big four, have almost relative to their assets, it's almost a negligible exposure to it. What we don't obviously know are the derivative exposures that they might have. So, you might have commercial default credit default swaps. You might have CLOs. You might have an equity investment in a regional bank that has an overexposure to it. So that's what we might not know in terms of the large banks. But if this was to become a problem, we think it would be different than 2008 in the sense that this would be a problem that happened from regional banks rather than a problem that happened at the giant financial institutions in 2008, Lehman, AIG, Merrill Lynch as an example. So we think that the problems would be smaller here. And ultimately, we think that one way that this problem can resolve itself would be that if the large banks were to buy some of these regional banks and recapitalize them with equity rather than debt, and repair the balance sheet of the damaged regional banks. But obviously, we don't foresee this as 2008, but we can see this going wrong.